Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Oh, let's start the music here, huh? Well, I think I screwed up here and didn't list the live stream early enough, so I hope... Oh, hey, Paul's there. Hey, Paul's always there. Hey, man. How's it going? All right, so... we had some crazy yesterday. I leave... You know, this is the thing when I'm not here at my trading desk all day, and then crazy shit happens. And nobody knows what to do, because I'm not here to calm them down. Yeah, the treasuries... they sold pretty hard off of the 20-year auction going not so good, and that pushed them down into new lows. I think we should come over here and look at a daily chart to kind of put things in perspective. Okay, so we are not into the levels that we were at like back in February, but it's getting a little ugly. And we can talk about why and the implications of that in a bit. It also created some pretty hefty selling in the S&P 500, and here in the morning, it looks like they're extending. Oil down big time. I don't know which headlines that is, but there's a lot of stuff going on in the geopolitical risk world. Gold and silver taking a hit yesterday, interestingly enough. Copper. Oof. Okay, but still in the range for copper. Japanese yen. So it looks like the whole treasury complex, Bitcoin, except for Bitcoin. Oh, that's interesting. So one of the issues that I get with Bitcoin, and like, because we want to see like, where is the money coming from? Where is the money going to? Is money really coming out of treasuries and gold and the Japanese yen and the stock market and all going into Bitcoin? I doubt it. But that's kind of what you would think from just looking at the charts, right? But the thing is that because the Bitcoin market is so fractured, it's really difficult for us to get a really clear idea of how much money actually is going into Bitcoin. So, okay, now we did have some economic numbers in here. Let's see here. Where is U.S. initial jobless claims? 227K versus the expected 230, so slightly better than expected. Continued jobless claims, much higher. 1.903 million versus an expected 1.8816. So continued jobless claims continues to remain stubbornly high. And I think that this is because they're not really hiring juniors. I think it's probably the tech market. You seen all this stuff yesterday that unemployment in tech was, at least for new graduates, was like the highest of any industry or something. Crazy stuff. Okay, we did move a little bit off of those jobless claims, but it looks like the treasuries are buying it up. All right, so here's the deal. That 20-year auction, a lot of people think that the 20-year auction went poorly because foreign buyers no longer want treasuries, and the reason that they don't want treasuries is because the Republican-controlled government in the United States is about to sign a bill that increases the deficit by $5 trillion over 10 years. At least according to CBO projections. Okay. Well, I'm seeing a lot of people. So you got to realize that there is now a retail trading cult following the bond market. And this retail trading cult is kind of like the Democrat version of Wall Street bets. And they think that treasuries, they get really excited about treasuries selling because they think that the Republican bill is going to just absolutely crater the treasury market. Okay, well, don't get me wrong. I don't think that the market likes this bill. In fact, I'm starting to think I don't like this bill. It really feels to me like well, this is the best that we can come up with, and we really need to do this right now. So let's just get this thing through. You know, that's usually how bad things happen. That's how we got Obamacare. You know, when it was like, let's just get something through, and you know, we can kind of refine things later. And I don't like that. I don't really see Republicans defending it. I don't really see a lot of social media activity about how great this bill is or why it's necessary or anything like that. But I do see a lot of economists and Democrats talking about how it increases the deficit according to CBO estimates. And we are seeing some bearishness in the in the bond market. Yeah, it seems to me that there are some bond vigilantes out there selling the treasuries because of the bill. Could that maybe be why the 20-year auction did so poorly? It might be a factor. But first of all, it was a 20-year auction. 20 years, kind of a weird spot in the yield curve. There's usually not as much activity. Yesterday, during our session, that was one of the most boring sessions I think we have ever had. And I can remember some really tight, boring treasury sessions in the early days of this stream, like back in 2017 and 2018, right? I remember many, many times where it was like the whole week, thing barely could move even 4 ticks, right? It was really quiet yesterday. So this idea that like people are going to come in and like sell the treasury market and the treasury market is just going to collapse does not really ring true to me. I do not see large players getting involved in this yet. The other thing is that we do have some comparisons. And if you watched my the YouTube short that I posted yesterday, I was going to say essentially the same thing. When the UK was doing this and the UK government was kind of facing a crisis, and the Republican response was, well, not the conservative response was to propose more tax cuts. And the market was like, no, we don't like that. What we're seeing right now is not anything like that. That was like everybody in the market was flipping out and scrambling around to try and deal with it. And the UK government very quickly, changed it, essentially. That the market scared the UK government out of doing it. That's not what I'm seeing going on right now. I think that you had a bad auction, yes, but on a part of the curve that doesn't have a lot of interest anyways, when it was like the only auction like that this week. And large players not really getting involved in the market right now. A rally that's mostly been driven by short covering and retail traders rather than large players getting involved in moving around. So the institutions are kind of not interested in doing anything in this market. And you get a bad auction and then all of the algorithms get triggered. Because the algorithms have kind of learned, if the bond auction is really bad, then we sell equities, and then everybody gets triggered and they're focused on it again, right? Because this isn't the first time that we've had an auction that was kind of poor, right? And it really hurt the equities market. But every time that that's happened, the equity market recovers within 2 days, right? I mean, we've had bad bills before. I don't think that this is a the market throws an absolute fit, the bond market crashes, and then the Senate decides, you know what, it's not worth it, we're not going to pass this bill. And like they go back on it. I don't think it's going to go that way. I think that there might be some mild selling from speculators. I think that the treasury market could go a little bit lower, but nothing end of the world. If anything, all of that volume short are those people that are probably going to get stuck, because if the market starts to become dysfunctional, then the very first thing that happens is Treasury Secretary Bessent comes in and starts doing repurchase agreements and things like that. So I think that you could see some mild selling that is likely to reverse very quickly afterwards, and the Republicans are going to shove it through. I don't think that they're going to be dissuaded. But that's also kind of the thing that bothers me, because like I just don't see in this instance the strategic vision. You know what I mean? Like I think that they're going to push it through, and I'm sitting here like, well, what's so important about this that we absolutely have to push it through? Don't see it. So that's the situation that we're in. And if that's the situation that we're in right now, then when I'm watching these flows here, I think I'm still looking for situations where I'm seeing shorts getting trapped and puking up higher. Right? I would want to see activity that is not like super strong trending action, like that there's a large meta order going off, but that there is a slight imbalance in favor of sellers, probably because of retail and speculators, that kind of flips around, you know? Do you also see/feel that ZB order flow changed the last couple of weeks? Like it's slower with more suddenly sharper moves, and I got filled much less. Or yeah, it has. We're running in a market where there are market moving headlines where the treasury market can move very, very quickly. Like yesterday after the bond auction, we've had moves where there's been strong trending action outside of the time when treasuries usually move. Like treasuries are usually, they trade between 8:30 and 11:30 Eastern time. So basically when the options pit for the treasuries open to when the London session closes. And that's like the most active time for the treasuries. That's when these big guys get most of their activity done. And we've had a lot of moves that were long after that. Right. So that's another thing is, you know, if people don't want to buy treasuries at these yields because they think that the government is fiscally irresponsible or whatever, right? I kind of feel that the number of institutions out there that have to change the amount of treasuries that they're buying in that situation is actually quite low. So really, we're talking more about speculators. They're a small part of the overall treasury market. So the institutions really aren't involved. You're not seeing the same amount of activity that you usually would in the busiest trading hours. When it does move, it's later. So that's probably speculators in the United States or funds in the United States. So yeah, you get this thing where it's like for us, now I haven't been trading it. I've kind of, most of these situations I've been like, I don't really, Thursday is a day where I think I would trade. But you know, there was like the news move and I'm looking at it right now and it just does not, it's not really showing me anything. I'm not really seeing like opportunity, you know? Not really seeing opportunity. Have you noticed such a change before? Well, yes. But it's not unusual for this to happen. It's not unusual at all for this to happen, especially not at this time of year. what is unusual is the situation, right? So when we were starting to see markets like this before, at least just the slow times, this was like during 2017 when quantitative easing was still like very much a thing. Treasury markets were like, it used to be that the treasury markets were just so high, and you would make so much money in the treasuries. It would move so much every day. And then it turned into a completely dead market, where it would like barely move 4 ticks, like we've been seeing lately, right? And that was essentially because the quantitative easing was like putting pressure on volatility and squeezing all of the volatility out of the market, right? Now, what we have now is they're actually in a period of quantitative tightening. There's a lot of headline risk out there, but they're not really seeing a lot of activity. So, I would expect activity to start to decline in the end of May, but not so hard when there's all these other things going on. You see? So that's a little bit weird. That's a little bit weird. But that's why I'm very, very skeptical of the play that the larger speculators are coming in and trying to make. Like, I'm seeing a lot of people that are just totally convinced that the treasury market is going to completely collapse. And I think it's kind of more like, if you were to go short treasuries here, you could maybe make a few percentage points. And any percentage point that you get is kind of like would make me more and more nervous, because that would just put us that much closer to the Treasury Secretary or the Federal Reserve coming in and doing something about it, right? Like the scenario doesn't really make sense in my opinion. So for us, well, there was a little bit of flow long there. I mean, we made new highs. It looks good. It looks like, I wish I was long. The robot was long. But that kind of looks a little lackluster. Now we're getting a little bit of iceberging there at 18.5 and 19. So that's something to keep in mind. We should note, we do actually have a lot of things going on today, right? We got S&P services and S&P PMIs. We get existing home sales. Then after our session, we get Kansas City Fed, and we have 10-year tips. So remember, tips are inflation protected securities. So if inflation goes up, you get compensated for it in a measurable amount. So that might be interesting to see how much. So here's one of the things that I think might be kind of weird about today is you might see a lot of people going, oh, well, there's another auction today. We better keep a really close eye on that. But what we're going to get, the results from that auction, is going to tell us something very, very different from what the auction yesterday told us. Like, if you see strong demand in the 10-year tips, that's kind of a little bit of a red flag to me, because that means that investors really are concerned about inflation, right? And if it's doesn't, that's because it's the inflation protected securities. So it's vice versa with if that auction goes poorly. But then if that auction goes poorly, it would be the same thing. Like, nobody wants the U.S. Treasuries. Well, okay. But it was a good trend. We're kind of in a little bit of a volume node, which kind of is not necessarily the best place to take a position. And the deltas were not that strong, so it's still giving me these kind of lackluster signals that make me feel a lot of FOMO, but ultimately not enough to trigger me into a position. I didn't even realize we're almost a 4-6. I guess we should keep an eye out because, you know, anything over 4.5, and I think that there's some institutions out there that'll be like, yeah, I really want that. Let's see here. So I come into Reddit, the first thing that I see is $75,000 a year is an elite level salary these days. Man, if you're in computer science, 75,000 was like starting to become the minimum coming out of school. It wouldn't surprise me to see that come back a little bit, but I don't think it's as bad as this person is saying. I see an economy that's mostly going pretty okay, but that a certain subsection of people are really, really hurting, primarily because of the high interest rates. I swear to God, I found a setting to change the menu buttons on the DOM and I can't find it again. Is that maybe in the new version of Jigsaw? Because I'm pretty sure there's never been one before that. But if there is any, you're probably looking at the skin. Oh, no, you're right. I do remember that. And add or remove buttons. Jeez, I don't know where that is. You were doing it, and then I literally forgot how I found it. That's funny. I do remember Jigsaw talking about an add or remove buttons feature, though. What if you do this and you right click? So, no. I wish that you hadn't mentioned that, because now I'm going to be... Oh, my Aqua Snap is not going. That's... Oh, it's just for the main window. I think that makes sense. Add or remove. Oh, yeah. Okay. So here on the main control center, all the way to the right, there's this teeny tiny little arrow, and then you can add or remove buttons. Must be something wrong with the Aqua Snap. Hey, that was a good looking uptick. That really, like, all of the orders on the DOM reacted to that. There's a relatively big one at 21. We'll see what happens here. There we go. There we go. It's just crashed and needed to be restarted. I remember the time when you would just add the DOM as an indicator in Jigsaw. Yeah. Sorry, DOM as an indicator in NinjaTrader. Yeah. Yep. I remember. Still a little bit weary about this. There was some good volume on that little push higher, but I don't know. We're kind of in a weird situation where hard to get the context, right? Okay, so we've beaten out the selling that we've had this morning. But then you basically from here there's like the overnight high to the 22-ish, 23-ish area. But then you still kind of have a gap all the way up to 27. 27 would be like a complete recovery, so but when you, even if I size my chart as small as I can get it, you can't see the full thing. Okay, so there was a big hit there at 21, but the offers restacked. Yeah. Okay. So a little setback there, but they were able to bid it up again. So the signals that we're getting from the DOM here are still really positive. I don't like the area tactically, but the DOM itself is screaming that they're going higher. Yeah, I don't like it tactically. I don't like the cumulative delta. It's not enough of a change in cumulative delta. But what I'm seeing in terms of like the stacking and pulling and how much it takes to tick it up and everything, that looks incredibly positive right now. Well, that back and forth right there might turn this 21 area into a problem area. That's the one first thing I'm worried about. Although there's been enough trend in this. This might be the, you know, it really extends way further than you think it should, and then it comes back to 21, you know? That happens a lot. Oh yeah, I forgot that the Senate passed the no tax on tips bill. I was telling my wife that you got to convince, because she's a flight attendant, you got to convince them to let them tip you now, so that we can make all of this tax-free income. Do tips, donations on YouTube count as tips? I don't know if they would actually count as tips though. Yeah, I want as much of my employment income to be tips as possible. Probably not the thing. You know, it's kind of interesting, like, to think about it. Like, where does the money go, and would it really result in a situation where some of the most lucrative jobs are ones where you get tipped? Okay, technical question. Why does the order book get so thin, spread widening during a key economic release? Is there a reason it does? Oh, yeah. Well, because the market makers, they don't want to eat that, right? So when you have an event like that that's going to come out at a specific time, there's going to be a ton of volatility. If you're providing liquidity during that time, then you're just going to take on a bunch of inventory against informed traders. So that's not a good situation for you. So they pull their liquidity for the news event. And then after the news event is over and they know what's going on, then they put the liquidity back.
Order canceled.
So part of why there is so much volatility around news is because liquidity gets pulled. And you can get a pretty good idea of how significant of a news event it is based on how aggressively they pull and how early they pull. Like if it's 5 minutes away and they're already pulling, then that is those are the big scary ones. Or sometimes for Federal Reserve meetings, like really big Federal Reserve meetings, they will pull 30 minutes before. One of the things that I will look for on a trend like we've been having is how the overall liquidity reacts as we move, if there is more or less liquidity. So right now we've got most levels between 30 and 35, which is pretty good, but that's what we've been doing lately. And it was what things were before this trend, so they have not actually added liquidity. There have been some hints of a liquidity hole forming at points, but nothing that really becomes a strong center of gravity for it. How much does it come back? 2 basis points? Okay. Why not use a footprint chart again? Because I really think it's unnecessary and we have limited space on the screen. Or maybe we're in a second leg. It could be. I mean, I kind of feel like that we're in a leg that never ended, though, you know? But it's still kind of like I'm a little bit unsure about whether it actually is like truly a meta order or not, just because, again, like the net change in cumulative delta has only been 10,000, 15,000. Well, if it is a meta order, could be a lot more than that, right? Oh, okay, look at that. Look at that iceberg at 22. Okay, so when you see that, a big iceberg on the bid. So one setup that we see, like when we're in a really good trend, is there will be icebergs at 22. They will take all of the fills, and then you might see the liquidity at 22.5 and 23 be really flighty, right? So in a really strong trend, that ends up being a really, really good play. I'm not going to say that this is a really strong trend. So I think this is kind of more regular action. In regular action, it's kind of more of a 50-50. And the key thing that can be a problem there, and that I think might be a problem in this situation, is that there might be a guy that is buying a ton, and that iceberg might have been him. And if they cut through the iceberg, then that means that that guy is filled. The person that was driving the trend is done. And so that often kind of signals the end of it, and it folds back on itself. And we were, they did trade through 21.5 pretty quickly after that. So it's already kind of giving me those signs that that's happening. That wouldn't necessarily be a reason to go short, but it is the sort of thing that can make a profit-taking zone. Okay, so now there's an iceberg on the offer. Well, we'll see how much and what the next tick is, but that might make me just throw my hands up, and I don't know what's going to happen here. 28, 29, it didn't hold, but so let's just note there's that 3,000 there. Well, okay, it already took another one, so you won't see that, but maybe it comes up and you see another 2,000 there. I wouldn't read that as a large iceberg. I would read that as multiple orders. Are we seeing... Oh, okay. Through a lot of this, there has been dollars selling. Oh, that's interesting. No, that's not what I was expecting at all, though. Okay, so with this whole thing about foreign buyers aren't as interested in buying treasuries right now, all of these sorts of things. Well, China's not as interested in buying treasuries, that's for sure. So do we see during the Asian session the dollar selling off in those situations? Well, I don't think that that's been the case. In fact, if we go back to the big event yesterday, which would have been around 11 o'clock right here, that was dollar at its lows, and since then it's been all buying. And now, where the treasuries have been rallying, the dollar has been falling. Whereas where I'd be concerned is the dollar's falling and the treasuries are falling. So not quite sure what to make of that. But, well, actually what we probably should make of that, because again, I've been looking at this like, well, I'm not really seeing like the signs that there's a huge meta order going in here. The flows, the amount of change in cumulative delta is way too little for as strong as this trend looks. Well, it's probably because it is being driven by the currency correlation. And that just makes the currency correlation being not quite what I would expect all the more interesting. So what's going on there? Are we seeing change in the yield curve? Okay, we were seeing the yield curve flatten as the treasuries were selling, but it steepened back out. So we are seeing some steepening in the yield curve. I would say gold seems to be following, if not leading the treasuries. No, it's much more. Oh, that's very interesting. It is very equities correlated. The bottom in the equities matches the bottom in the treasuries almost exactly. So we're getting positive correlation with equity markets, which was the thing that, you know, we were getting before when we really didn't like what was going on in the treasuries. They were selling the treasuries and whatnot. Now it's the opposite. Suppose it could just be profit taking. This is definitely the most interesting move we've had all week, isn't it? I'm not quite sure what to make of it. Okay, there is... I am starting to see enough volume having traded in this area to make me really, really wary about opening new positions here. There is a little bit of that low resting liquidity, right? Like they're only showing 100 back and forth. Do you look at the bond yield stock yield ratio? No. Not regularly, at least. It's not something on my charts or anything. I mean, I suppose I look at anything if Wall Street analysts are pointing it out. I really, really like the reports that come from the market year on Zero Hedge. Although I would say they're not as good as they were when it was just on Twitter. But you think it's time to go to bonds now because of that? Okay. Like more broadly, you know, it's kind of funny because I kind of like don't want to make a call like that, like long or short bonds or anything. But the truth is I'm long bonds and I have a hard time seeing the bonds continuing to sell. I think that's part of why it's like, okay, I'm seeing a situation where I think that bonds are a little too low. I think the yields are a little too high, and that, you know, the Federal Reserve is going to come and change that soon. And meanwhile, I go on Reddit and I'm seeing all of these retail trade, you know, like there was never activity in the bond subreddit. It was like, you know, you'd go and post and there was only like 3 people. There was people that knew what they were talking about and everything, and you would get your questions answered, but there wasn't a lot of people posting in it. And now all of a sudden, I see posts there every day with hundreds of comments from people that I don't think have any clue what's going on. Some people and all pretty bearish, all of them making comments that I think are kind of silly, to be honest. And that just kind of fuels my confidence that short is probably the wrong play right now. Like, I think short term, there's certainly possibility that treasuries go a little bit lower. But the price that you're getting right now isn't bad. Okay, well, I should note that I should note that the flow in the dollar has kind of shifted. The flow in the S&P 500 has kind of pulled back. And so the treasuries have as well. So you're not necessarily seeing like a huge reversal in cumulative delta, but because the cumulative delta wasn't super high to begin with, okay, it actually is maybe like half of the cumulative delta. But prices certainly come back. It's kind of, but So here's the thing, is that if it was a large meta order in the treasuries, right, then we'd expect to see that short-term mean reversion period, and then they would build out a volume profile in that spot, something like this, right? But I'm not so sure we're seeing that. We've got this big guy right here and this big guy right here. We're already kind of into the lower spot of the profile. It looks very disorganized to me. So that's perhaps more signs that it is being driven primarily by the correlations and not flows directly in the treasuries. Let's maybe recenter. There's a bit of volume trading at 19.5. It's kind of interesting because 19 was about the spot where I was kind of like, I'm not completely on board this move. R/day trading, are you smarter than ChatGPT? Okay, so like the number of people trying to trade with ChatGPT is, I think, hilarious. You know what I think is the biggest risk when you're heavily using AI? Is I think that AI enables bad ideas. like if I'm trying to solve a particular problem and I'm going down one path of trying to solve it, and I start asking the AI, and it's pretty good at finding a way to do it if there's a way to do it, right? But if that's like ultimately the bad architectural solution, it's not going to tell me that. I'm just going to get the thing done and think that it's fine that way. Here in trading, you know, markets are very random. So you could come in and ask ChatGPT to take a trade, and you follow it and you make money, and that's going to reinforce it, even if it's just random. And you're just going to continue going down that road, and it's not going to tell you, hey, actually, I don't know what I'm doing. This is just luck. It doesn't know that. Of course, most humans don't know that either, so pick your poison, right? Oh, I didn't read that Trump's tax bill did pass the House. Okay. So let me read a few things here. President Trump has weighed in with a lengthy Truth Social post after his big beautiful bill narrowly cleared the House in a last-minute 215 to 214 vote. Wow, that was that close, huh? The one big beautiful bill has passed the House of Representatives. This is arguably the most significant piece of legislation ever signed in the history of our country. Wow. The bill includes massive tax cuts, no tax on tips, no tax on overtime, tax deductions when you purchase an American-made vehicle, along with strong border security measures, pay raises for our ICE and Border Patrol agents, funding for the Golden Dome, Trump savings accounts for newborn babies. Oh, really? I want to invest in savings accounts for newborn babies. Great job by Speaker Mike Johnson and the House leadership. Thank you for every Republican who voted yes on this bill. Now it's time for our friends in the United States Senate to get to work and send this bill to my desk as soon as possible. There's no time to waste. Democrats have lost control of themselves and are aimlessly wandering around showing no confidence, grit, or determination. They have forgotten their landslide loss in the presidential election and are warped in the past, hoping someday to revive open borders for the world's criminals to be able to pour into our country, men to be able to play in women's sports, and transgender for everyone. They don't realize that these things and so many more like them will never again happen. Oh, the treasury's bounced back up here. Okay, cool. The question is it going to be 20 half or 21 half? I mean, I guess it's 21 half because the point of control did change. All right. Well, is the reason that they're so dead set on that is because it does include most of the policy proposals that he promised people during his election campaign? Okay. As 10-year yields surge, at what rate do stocks break? U.S. equity futures are fading in the pre-market, extending yesterday's post-auction plunge. Well, when they said that, that's already recovered that particular plunge. So, mirroring the rise in Treasury yields following the passage of the one big beautiful bill, chaos in the Japanese bond markets and hot UK. Oh, okay. So was that the passage? How come? Maybe my news squawk is broken here. Maybe I need to refresh the page. The big question everyone wants to know is simple. When do equities care about bond yields? And the answer, according to Goldman Sachs, is now. Historically, it's speed that matters rather than the level. Equities tend to care when yields rise 2 standard deviations over 1 month. This is roughly 60 basis points, so around 4.75 to 4.8 on the US 10-year. In other words, we are getting very close. So I do think that the absolute level matters as well, but I would say that, because I can remember many times where we've had this argument, like, is it the absolute level or is it the amount of change? And I've always kind of come down on it's the amount of change. So what Zero Hedge is saying there is in line with my own kind of intuition of it and what we've seen in the past even. But I do think that the absolute level matters too. So there's this thing where, like, you know, if the bonds move, they tend to lead the Federal Reserve, right? But is the market moving on anything that would change the Federal Reserve's opinion of things? I don't think so. Of course, the Federal Reserve's opinion is it's still too early for us to say what we're going to do. So there's that. But if the Federal Reserve if this isn't going to shift the Federal Reserve, then the bond market can only go too far, you know? And given that the rate is 4.5, right? So for us to be starting to go into 4.75 or 5% in the 10-year, that would be like a huge dislocation relative to what the market seems to be pricing that the Federal Reserve is going to do. So again, it kind of looks to me like short-term liquidity volume sort of things going and moving the bonds, but not changing the absolute trajectory of interest rates. That move is likely to be short-lived. Or like, to put it another way, like there's been selling, what's going to continue to drive the selling? Other than momentum, I guess. Man, my rib cage lately has been pretty. The customizable menu. No, I fixed it. Did that not answer your question? You come in, I have it on the screen here. I found it, toyed with it, closed, my brain went blank. Here's the control center, and on the very right corner, there's a little down pointing arrow, and I click on it. I left click on it, just a regular click, and add or remove buttons, tools, and then I can pick which ones I want. That lets you customize the main window, but you want to do it on the DOM. Not the menu above the DOM. Okay, then which menu? Oh, this one does it on the thing and not the DOM, and you want it to do it on the DOM. Yeah, okay. Was it that, did you have the menu open? Was it a menu? Was it in the depth and sales settings? Maybe you weren't actually changing the menu and you remember that wrong. I have to question everything now. Oh my gosh, my ribcage is just... I don't know if it's my chair at work or... The treasury's coming back down now? No, well, it's only 1 or 2 ticks, but... Oh, you actually did change it. Are you using the demo, the beta version of Jigsaw, though? Because maybe it's a setting that I don't have, and ergo can't help you find. Morning, Dom Bricks. I am kind of looking at it like, well, I can't imagine where a setting like that would be. Is the robot chicken? The robot is on. And the robot took a trade long. Oh, is it short now? Yes, it's actually been short through this. It actually, when you look at it, see, it might be hard to see. You know, it's time to restart the pen. Hold on. It's right there. Is where it got in. So it actually, it was maybe a little bit early, but it got in at like the perfect place. I did start it late though, so it didn't get the initial long. If I had turned it on, before I went to breakfast and everything, then it might have taken that trade. Trump thinking about taking Fannie Mae and Freddie Mac public? Why necessarily would you do that? Does the government make a lot of money from doing that? Wouldn't they make more money from keeping it? Are you? I'm still testing it. So I wouldn't even say we're testing it. I think that we've tested it, and I want to make some changes to it, and I haven't gotten around to it. I just don't really have the time anymore to do those sort of thing. So it might be kind of in this state for a while. So what we find with the robot, number one, we need it to use the limit orders when appropriate. So we're going to try and use the book to determine if it should really use a market order or not. Because picking up one tick on each side would actually make a pretty significant difference to its performance. But the bigger problem is that it does extremely well in some regimes, and it just kind of loses money in other regimes. And I can actually predict pretty well how it's going to perform based on what regime it is, but I don't have any technical indicators to indicate what regime we're in. So if I was able to add some sort of a filter, or just use the performance of it somehow, to deal with regime switching, then I think that the robot would be really, really effective. I would say this week it's been doing pretty good. So, I don't know. I'm gonna go roll my back because I keep feeling the pressure coming into my chest, so it must be something out my back. So Rubner asks, wouldn't the TPO chart with a moving average help? No, I don't see how it would. In fact, moving average would probably really, really hurt the performance of the strategy because it would start taking all of the trades late. But it's making money today. So, yeah, what you gonna say? Was actually making some pretty good money on that one, but it's come back. It's only one tick in the money right now on that one. So that's another problem with the algorithm. I've actually wondered if maybe it's not a problem. Maybe it's actually showing me, yeah, here's something about it that's really, really good. Is that it usually does get some favorable excursion and right away as well. So it's kind of like it's getting it, but it doesn't know when that flow is ending and it should switch. And it should just get out and take the quick profit, right? It says either hold it an hour, hold it until the flow flips around, or take 10 ticks. So when it's not moving as much as 10 ticks, holding it for an hour is too much. Can you integrate OpenSea? I don't know what that is. But I think that I think that we want to implement some machine learning to it. And just don't have the time. Or the attention span. I don't even really have enough time to like write video scripts. So that was an interesting uptick. So do you notice how after that uptick, now all of these offers and everything are kind of shifting around? Like there's lots of level, like that uptick changed the activity level of the market. Didn't hold, but yeah. So I don't know what OpenCV is. The model that I was looking at was I can't even remember now. No, it wasn't XG. I think it was Tabnet, yes. Tabnet. Tabnet is what I wanted to look at. Thank you for reminding me, Uzi. Services PMI in a bit. It's the S&P PMIs, but especially since that's like some of the most consequential economic data that we get all week, I think that will be a relatively significant driver of the flows. And then 15 minutes after that, we get the existing home sales. You know what? I think it is my chair at work. I think that my chair at work does not have good enough lumbar support. I've been thinking about bringing in my own chair, like maybe taking this chair. But they're like changing the workspace in June. So I think I'll wait until that. You know what else hurts is that, when my back is kind of like that, I like to squeeze my shoulder blades together, and that will often kind of move the joints around to get them back into where they're comfortable. And nice dress shirt kind of restricts your movement. It's hard to do that, so I can't really adjust it. I got some really nice shirts. I'm really happy in the quality of the shirt, but after this I need to find shirts that are like more tailored. One where the armhole isn't like halfway down my ribs so that I can actually put my arms over my head, you know? Like if I even put my arm like up that high, I can feel it tugging on, untucking the shirt. I hate that. Okay, we're pulling. You know what? I think my financial juice is still broken. There we go. So for the composite, they're looking for a reading of 50 spot 3. It's better than expected at 52. 52 spot 3. It's good in services and manufacturing. Man, the dollar really jumped on that, didn't it? And the treasuries giving up most of the gains for the session. Yeah, I'd say that's a mild move. Pretty appropriate for the news that we got, given that it's usually not a huge mover. Yeah, I think I called that one pretty well. I didn't have a prediction that it was going to move up or down, so I don't know if I had tried to make a prediction that I would have said that the treasuries would move down, but I suppose it's only interesting in as much as we have more news in 15 minutes. That also, okay, so one of the things is my algorithm is supposed to exit before news, and we never fixed the file, did we? So it held that and made a ton of money on that when it shouldn't have. Today is end of the week for me. Tomorrow will be a low volume with the holiday. Okay, so that's interesting that's never something that you've said before. And the thing is always that we often will see really bizarre, large moves around holidays. Lately, it's been before holidays, right? So I kind of suspect that there could be a move tomorrow. But at the same time, I do kind of think like, oh, it would be low volume. Seems to ring true to me. I don't know. I guess we'll see. I kind of feel like that there's... bridge and tunnel crowd will be gone. Well, so hold on. We don't have anything tomorrow, right? New home sales and a bunch of Fed speakers. Musalam. Audience questions expected. Schmid. Audience questions expected. Oh. Oh, never mind. It doesn't say where. Cook. 7th annual. It sounds like it's an event put on by the Federal Reserve Bank of Kansas City, but Cook might not be as big of a deal due to deliver a speech titled Financial Stability at the 7th Annual Women in Macro Conference. FOMC Financial Stability Report. That's one that I don't typically see the market react to, but that we often get really good color information from. So I think it's plausible that there are some guys that are not going to be working tomorrow for sure. I don't know, man. If it's going to be like that, we usually have a big move the week before a holiday. Was this the big move? We already did it. The opportunities passed. Oh, I don't have the pen turned on. Hold on. Was this the big move? Or maybe this? Over the weekend? I don't know. I'm not entirely sure. I'll still be here. The question is, should I be here on Monday? I think that on Monday, we should use that opportunity to update the robot a little bit. Fix the news data for the year and implement using market or limit orders. I'm wondering if I'm going to have to turn to the advanced order handling, which gets complicated. I've messed with that stuff in other people's indicators and strategies, but not in one of my own strategies. So I guess that could get interesting. I don't think that we would have enough time for me to get into the machine learning stuff, though. Oh, oil prices dip on report of another potential OPEC plus supply boost. I tell you what, man, it's so comical, but it really was like Donald Trump has really worked to develop relationships with the Saudis and really anybody else that he can. And OPEC has rewarded him for it. Whereas it was just a complete shit show for the entirety of Joe Biden's term. And it does have a measurable economic impact I feel. Okay, so I'm still seeing this positive correlation between equities and treasuries. Like the S&P 500 just started taking off, and so the treasuries started moving up too. Okay, well, I will stay for the news, but then I've got to end the stream like right then after that, right? So when you place a trade, you dynamically... Okay, so when I place a trade, when I'm in a trade, I am entirely relying on market signals to determine where I get out. So the most important thing is I'm looking for a liquidity hole. Someplace where that's often, and we kind of identified it when it happened today, by the way. So today might be a good example to go back and watch. When we were first touching 21, there was this big iceberg there. It kind of folded back on it, and then they started building volume at that price. And then what you started to see was like they'd only put 100 or 200 contracts at that price, whether it was bid or offer, and they'd just go back and forth across that. So that is kind of the sign to me that the market is forming a liquidity hole. That doesn't mean that it can't move up from there or that it can't reverse, but what it does do is it kind of becomes a magnet, and it will tend to keep price in that narrow band. So if I've just had a good trend and I start to see that, I go, oh yeah, I want to get out, because I know that it's not going to go anywhere for a while. So that's what I'm primarily using to determine where I get out. It's unfortunately I feel like something that's more complicated than I have the ability to program, so I can't automate it. So that's generally what I'm doing. Okay. But the other thing that I would say is in my back testing, using a set take profit stop loss has such a dramatic effect on your strategy. Basically, like, it's, if you're using set stops and targets, your results mostly reflect volatility of the market, essentially. So, which will basically mean that it will tend to converge on break even. So in order to get like more interesting distributions that can actually be useful, you have to do something different. So another way of putting it is, I actually feel that set stop losses and take profits can harm or ruin an otherwise good strategy. In backtesting, the strategies that perform the best for me have always been stop and reverse, which is to say, you get some entry signal, you stay in that until you get the opposite entry signal, canceled, and you go against it. Those are the ones where you'll actually start to get some really interesting statistical behaviors out of them. Okay. Now, I will say also that ATR kind of helps, but I've never found it to make a dramatic enough of a difference to really save a strategy or anything. So yeah, where to get out is probably like, well, okay, like if I go back, when do I get in, and can I find something that will reduce the chances of the price going against me. So every time that there's a tick against me, we call that adverse excursion, right? So is there anything that we can use to minimize adverse excursion? And I've tried a bunch of things and searched, and I cannot find anything that is really, truly effective at minimizing your adverse excursion. So if there's not something that can minimize your adverse excursion, or at least we can't find it, then you would expect the same thing on the other side, that it would be very, very difficult to find something that will get you like the maximum profit available in that trade, right? Now, the split side of it, that the other, like the maximum favorable excursion, that is something that we found a lot of stuff that kind of helps you. Okay. So certain things like getting in when there isn't very much of a trend yet, you're going to get, when you're going to get larger winners, for instance. So but I think that, well, okay, so here's the numbers. What did we get? Existing home sales change pretty negative spot 5 versus an expected 1.99%. Yeah. I think that it's kind of more broadly the same kinds of problems with algorithmic trading in general. Like I haven't heard of this institutional algorithm that knows when to get in and then holds it for an hour and gets out at exactly the right spot and all of those sorts of things, right? Like the institutional strategies that I know of, that I've heard of, are like arbitrage strategies or order flow, short-term order flow strategies, right? And this sort of thing that we're doing where I want to hold it for like 30 minutes is kind of like this wasteland of unprofitable algorithms, you know? So but I have to say, like, this algorithm has done some amazing things. I must say, like, I've had plenty of algos where, like, I backtest it, you know, I put a lot of work into it and I backtest it. The backtest seems okay. And then when I start trading it, it's not really, you know, I overfit it or who knows, or it just was no longer the right market for it. This one was, I think, one of the first times where when I started testing it, it did too well. It was like I knew that was a possibility where it would do well in a situation like that, but it just happened to happen right when I started testing it. It was really impressive, right? And the results that we have been getting reflect the backtesting very, very well. So this algo has been doing better. And in order to do this one, I had to do a lot of custom stuff, right? So I'm hoping that adding some machine learning and stuff on top of it for handling regime switching would really, really benefit the algo, but we'll see. We'll see. I don't know if I'll ever get to it, though. I don't know, man. Lately, it's kind of funny because, you know, I was in a period like this where I worked and I found a way to make content on the weekend and everything, and I found a way to build my algorithms, but right now I'm just not finding the time. So, but some things are getting better. The kids haven't been able to destroy the room, especially not if I'm in here. So that's good. And I got these new chairs. Did you see these new chairs? It is like the ugliest color I've ever seen. It is like really, really ugly, but the boys can sit in that chair while I'm on the computer. I'm thinking each one of them has a chair. I'm in the middle, so they're separated. I give them an iPhone or whatever so that they're occupied and they can watch me, I think that they might go with it. That looks comfortable. Well, yeah, that it's orange. Yeah, it's ugly AF. It's a steel case Leap. So if you want a chair and you want the chair that I think is going to be the best chair for the most people, it is absolutely the steel case Leap. And that's what this one is too, this red one. But it's a different material. It's an older one, and I don't know. I would like to get a brand new steel case Leap that's like leather. That'd be nice. Ooh, that's what I'm gonna do when I get to work, and I'm kind of like dopamine browsing in between, when I'm taking breaks. So I go and look for a really nice leather steel case Leap and see what they have. Okay, so after that news, we are moving up. Be interesting to see if they. So remember, it's not until like what 26 or 27 that we recover the downturn from yesterday. But if we do, could get interesting. So, and there is a holiday on Monday, so tomorrow might be interesting. But we'll be here tomorrow. We'll probably be here Monday. So, see you guys then. In the meantime, stay excellent.